Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 7th of February 2020, so welcome everyone. Welcome to this Friday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But as always, before we do that, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you guys to read the rest and we can continue. Okay, now then, also just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis. So I believe you can find a lot of useful information there, guys, for yourselves. So feel free to visit us here on jfdbank.com and click on the research page, research tab right there. Now then, let's jump into the charts. Now, the first one I want to touch on here is the Nasdaq100. Now, yesterday we had another exciting day for the US equity markets. So Nasdaq100 created a new all-time high. It managed to close around the area near the 9,446 territory, roughly around there. But looking at the cash index right now, we are seeing a bit of a decline. Now, the price is currently balancing around the 9,400 zone. So in a way, this is the area where it is currently set at. So it's roughly around here. So in a way, we're going to be very careful and very cautious here. For us to maybe consider the downside, ideally we would like to see a drop back below the 9,272 zone, which is marked by the high of January, or in other words the highest point of January, and this way we could consider a move lower towards the this medium-term upside support line taken from the low of the 3rd of October. So in a way, for now, of course, although we are seeing a bit of a correction in the cash index, let's see how this is going to play out today throughout the US session. But again, for now, the main thing what you could do is, of course, keep your eyes on this this 9,272 zone that I've mentioned, the highest point of January. A drop below this would would confirm or actually wouldn't confirm, but it could in a way increase the chances of a further drift lower, and in a way it could in a way also place the price below the 21 EMA here on the 4-hour chart. Now, in terms of the upside, pretty straightforward. We need to see a nice good push above the yesterday's high before we could consider a further move to the upside. So again, for now, keep your eyes on the yesterday's close and the yesterday's high near the 9,448 zone, 49 area, approximately around there, and a nice good push above this. Basically, in other words, a nice good push above the 9,450 zone could do the trick here for more buyers, and we could see another all-time high. Jumping into US dollar against the Singapore dollar. Now, this is what I just want to quickly mention this one because this is what I talked this morning and also yesterday. Basically, I wanted to kind of point, get your attention on what's happening here in this situation here in this currency pair. Basically, this morning what I was saying, that we were still hanging around below the 1.38, let's round it up towards the 80 zone. So we were still hanging around below that level, which is near the high of 1st of October of last year. What I was saying, that if this territory holds, we could see another we could see a bit of a correction here, maybe going back down towards the 23.6% Fibonacci. But as you can see, the acceleration continues, and basically it's kind of coming in line with the idea that I've mentioned yesterday in my traders espresso as well, when I was covering this one, because what I was saying, that if this fails, if the highest point of October fails to withhold, then well, it is opening the path towards the highest point of September, which is roughly around the 1.3942 zone. So this is what we're going to be keeping a close eye on. In a way, if it finds support here, then we could oh sorry, support. If it finds resistance here, then yes, we could maybe consider a bit of correction. But for now, it's a one-way traffic, and that's understandable because we again, as I've mentioned previously in my videos, Singapore is heavily reliant on China. I mean, in terms of trade and in tourism. So as a lot of Chinese tourists kind of do travel to Singapore, but again, given the current situation with the coronavirus, that has dropped, and it's now the government is considering, or I should say, started already actually, the easing, the quantitative easing. So in order to kind of support the economy here a little bit, and we're seeing this devaluation of the Singapore dollar against the US dollar. So for now, of course, the aim is to aim for the 1.3942 zone. We'll see how it performs around there, but if it starts pushing further north, then, well, I mean, of course, we will start looking at levels last seen in around May 2017. But first, let's get to this highest point of 2019 first and see if it actually can overcome it, or if this area can hold the rate down a little bit, at least maybe to get a bit of correction here before another leg of buying. So let's keep an eye on that one. AUDUSD. So very quickly on this, I talked about this one recently, and of course, what I was mentioning and what I was saying, that if the pair decides to travel a little bit higher but fails to push above this downside line taken from the high of the 1st of January, this is where it could become a little bit more interesting for the sellers, and it could in a way increase the chances of another slide. So we're getting that slide already, so that's good news here for the sellers. The only thing is that we've managed to reach this key area of support, and let me just quickly show you what I'm talking about. So this lowest point of October of last year, this is where the pair is currently balancing at, so that's near the 0.6668 area. The big question here is, can this actually stay above it, or will it actually end the week below this area? So if it does end the week below it, then, well, I mean, we could see further declines going into next week. Maybe not that significant, but still a bit more declines. Of course, at some point we should be seeing a bit of correction, but again, for now it's kind of also more bearish than bullish. So let's see how this is going to play out, guys. For now, like I said, we are more bearish than bullish, and but ideally what we're going to do here today is we're going to keep an eye on the weekly close, and we'll see if it stays below this, then yes, further declines are possible. But if it stays above it, maybe there could be a bit of a chance here for the bulls to step in and maybe lift this one to the upside next week. So again, all eyes are on this little area, the lowest point of October, and let's see how this is going to play out, guys. USDCAD. So we got the NFP figures. We got the NFP figure, so the non-farm payrolls, U.S. non-farm payrolls, came out better than than expected, than forecasted. So we initially we got a nice boost before the figures came out. Actually, we saw the pair drifting above the this barrier, the 1.3305. I talked about this one this morning. I was telling you guys to keep a close eye on it, and basically I just wanted to kind of show you what happened here. Initially, the unemployment rate came out worse than expected, so it came out at 3.6 versus the forecasted 3.5 and the previous 3.5. So we did get a bit of a drop to the downside. Unemployment figures from Canada came out better, so we had initially this nice drop lower, so the initial reaction. But this is what I was saying, guys, this morning. Basically, always wait for the release first, and then look at what we can do with it, because you can see that this is the initial reaction. We did drop back inside this little range here that I was talking about. The range, by the way, is roughly between the 1.3258 and the 1.3305, but then as you can see, the bulls quickly pushed it back above this upper bound of this range, and now this is where the rate is currently balancing at. Of course, all this activity activity kind of creates this more of a bullish atmosphere for now, and again, we will continue aiming for the highest point of October initially, sorry, November, which is roughly around the 1.3328 zone, and then of course the 1.3348 area, which is the highest point of October. So again, for now, the fact that it's currently balancing above this upper bound of the short-term range here, that's great. That's wonderful, good news for the bulls. But if suddenly, let's say, this starts dropping back inside of it and eventually drops below the 1.3258 zone, then, well, this is where we will consider a deeper move lower. Now, again, with the deeper move lower, still all this move down here could in a way be limited near this upside support line taken from the low of the 7th of January. So something to consider, guys. And in a way, if this upside line holds, so the whole move lower here could be seen as a temporary correction before another leg of buying. So something like this, basically, guys, could be possible. Again, we'll take this one right now from the very short-term perspective. Let's see how this is going to play out around this today, around this this barrier, especially the 1.3305. If it stays above it, then we will aim for a bit of more upside for next week. But let's face it, if it gets a nice hold up somewhere near these two levels, we may get a bit of a deeper correction to the downside. So that's why, guys, for now, be very careful, be very cautious with this one. Of course, have your stop losses in place, and yep, if, let's say, by any chance this suddenly starts dropping lower and drops below the 1.3258 area, then, well, we will, like I said, we will consider a deeper correction here to the downside. USDJPY now, very quickly on this. So the yen buying has increased, and this is what I was talking about this morning. And this morning we were still hanging around here, and what I was saying, that we may see a bit of correction to the downside, given the fact that we already had a nice, good, strong push higher. But you can see that the pair kind of got held near the psychological 110 zone. So in a way, it's kind of a healthy correction, I would say, right now. The only thing is, we'll keep an eye on some of these key support areas. So of course, the first one being this one, the 109.65 area. You can see that currently it is getting a hold up here. If it continues to get held here by this area, then we could see the bulls jumping in here and driving this one not only back to the 110 territory, but also towards the highest point of January, near the 110.29 level. We're not going to drag this one to let's say further north. We want to see how it performs around here, but again, we will consider this scenario if we get a nice rebound from the 109.65 level, which we are getting right now. But again, we still have a full US session to go through. In case this suddenly starts dropping below this, all this is somewhat of a neutral territory for us. We'll just stay away from it and just continue observing it. But if it suddenly starts dropping below the 109.26, 27 territory here, now this is where it could become a little bit more interesting for the sellers, because this would also place the rate below the 200 EMA on the 4-hour chart, and yep, further declines could be possible. Again, keep your eyes on some of these levels that I've mentioned right now, guys, and let's see how this is going to play out. GBPUSD. I talked about this one as well, and basically what I wanted to show you guys, I've mentioned this one in my Traders Tea Time yesterday, and the fact that it broke below this upside line and stayed below the 1.2950 zone, of course, creates this a bit of a more of a bearish atmosphere for now. Now you can see that the pair is struggling to move lower, and in a way, this area here becomes quite an interesting one to watch. So the 1.2903 zone, which is the lowest point of December, and is that, sorry, do apologize, not the lowest point of, is it the lowest point of December? No, not really. So it's the low of the 23rd of December. There we go. So we'll keep an eye on that one. Of course, like I said, for now we're more bearish than bullish on this one, given the fact that we managed to break this medium-term upside support line taken from the low of the 3rd of September. We managed to drop below this key area of support near the 1.2950. So all this is kind of leaning more towards the downside. again, like I said, we are going to be aiming for lower levels, and if we do get a drop below the 1.2903, this is just put that cherry on top, and we could see more sellers joining in here and driving this one even further south. For now, with the upside on this one, well, I mean, of course, we would like to see a push back above this upside line, maybe a push back above the 1.3066 zone, but probably ideally for now at this point in time, a push back above the 1.3110 zone could in a way do the trick here for more buyers. Again, until then, we'll be very careful with the upside. If by any chance this by the end of this week, or by the end of today, it travels back above this upside line, this could in a way give a bit of hope for the buyers going into next week, but probably I wouldn't kind of give or wouldn't say so that the bulls would be too confident on this one. Let's put it that way. There we go. Managed to squeeze this one out. So like I said, it needs to be for now everything's kind of leaning more towards the downside, again, given the fact that it's below this upside line, below this key support area, and yep, it's not far from this other key area of support near the 1.2903. so if that gets broken, then yep, further declines are possible. So for now, keep your eyes on that one, guys, and let's see how this is going to play out. Euro USD now, perfect move today, and this is what I've mentioned this morning. If we get a drop below the 1.0963 zone, which is the low of yesterday, then yep, we could see of course, first of all, a forthcoming lower low, and then we will aim for the 1.0939 zone. As you can see, the 1.0939 area is the low of the 8th of October, and this could be a nice area of support. Maybe still we could see this one reaching this area, but this week we already had a very strong move to the downside relatively, and in a way now we're seeing a bit of correction here to the upside. Don't get me wrong, for us to, at this point in time now, for us to consider the upside, well, ideally we would like to see now a push back, not only back above the 1.10 zone, but also back above the 1.1015 territory, and then we will aim for the upside. But even so, we still have this downside line, and let me just remove this one. We still have this downside line taken from the high of the 31st of December, and which could in a way provide some resistance. But if that gets broken, now this is where it could become even more interesting for the buyers. But for now, from the very short-term perspective, yes, we can see that the pair is trying to climb back, but again, this could be just a temporary correction. Before another leg of selling. We do have a very good area, very good target here near the 1.0939. So initially we will target that, but if that gets broken, well, we could see further declines, but we'll reevaluate euro dollar at that stage, at that time. For now, if this by any chance travels back above the 1.0990, this could in a way give a bit of hope for the buyers, but just to be on the safe side, a push back above the 1.10 or even the 1.1015 could in a way do the trick here for more buyers, at least in the short run. But still, like I said, for now the pair is below this downside line, so like I said, the bulls should not kind of have their hopes up yet, and if this line gets broken, now this is where it could become more interesting for the buyers. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me on Monday morning, as always, at my Traders Espresso, 7 o'clock GMT time, and as I said, I hope you found it useful. I hope if you're still trading, guys, be very careful today. Don't overtrade. It's Friday, and have a everybody just have a wonderful weekend, and try to relax, try to enjoy your weekend, and we'll come back fresh on Monday at 7 o'clock GMT time at my Traders Espresso. So yeah, guys, see you then. Thank you very much, and bye-bye.